Good afternoon, ladies and gentlemen, and welcome to the BLANCCO Technology Group PLC investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I would now like to hand you over to Matt Jones, CEO, and Adam Maloney, CFO of BLANCCO Technology Group PLC. Good afternoon, guys.
Good afternoon, everybody. And this is Matt Jones. As was mentioned, I'm the CEO. Adam Maloney, our CFO, will be speaking during the presentation as well, too. I'm really glad you could join us today as we present the BLANCCO story. So we really have 6 things we want to cover today. Since I expect this is likely the first time you may have heard of BLANCCO or don't know our story, we'll give you some background and company overview, and then we'll go through some highlights for the year and how COVID has impacted us. Talk about market drivers and things that are going on in the market that affect us. Talks about customer use cases. Adam will do a quick financial review, and then we'll summarize. Hopefully there'll be plenty of time at the end of this to go through any questions you have. I expect we can walk through this presentation in probably about 30 minutes. So, BLANCCO was formed over 20 years ago in Finland, and over the past 20 years, we've grown substantially. We now have offices and people in over 15 countries. We do business in over 50 countries, and we became a listed company on the AIM market in 2016. You're going to hear us reference 3 markets that we call on that buy our services. The enterprise market, where we sell to Fortune 2000 companies, and we have several really high-profile Fortune 50 companies that buy our service. The mobile market, and the mobile market's made up of carriers, third-party logistics companies, insurance companies that service the mobile market. And the third market we cover is the IT asset disposition market, or sometimes you'll hear us refer to it as the ITAD market. And those are large companies that work with enterprises that pick up equipment at its end of life and either resell it, recycle it, or refurbish it. And so again, over and over through the presentation, you'll hear Adam and I talk about these 3 markets and how we sell to them and how we service them. If you look, BLANCCO is really a pure software company, and we provide software that does really 2 basic things: erasure of data and diagnostics. So we have the capabilities you see in the slide to erase data off any device, any medium, permanently and auditably. So, it doesn't matter if it's a mobile phone, a laptop, or some big storage array in an enterprise data center. It can be live data. It can be data, that is at end of life. It can be an entire storage array, or it can be a single file on your laptop. So if it's data and we can get to it, we can erase it. And then at the end, of course, we provide a report that shows what's been erased, so people can know from both an audit and security perspective that they can understand what's been erased, when it's been erased. One of the things that's very important to our customers is that we can prove that our erasure service is completely done. So we spend a lot of time getting certifications from government agencies, from independent bodies around the world that have tested our product and confirmed it works at the highest level. The only technology that can really erase data from a piece of equipment as well as BLANCCO is physical destruction. And I think you'll hear Adam talk about physical destruction, but clearly we believe a software erasure is much better from many different aspects than physical destruction. And again, we'll go through that a little bit later in terms of how those 2 compare. But again, we spent lots of time working with these agencies to ensure that our product is the best product in the market and can do exactly what we say it can do. If we take a look now at kind of some quick highlights, from a financial perspective, and again, Adam will go through these in much more detail in a couple slides. Throughout this year, which just ended in June 30th was our fiscal year, revenue grew by 9%, operating profit 14% up, EBITDA up 17%, and our net cash increased from just over $0.1 million to $6.7 million. That was a combination of 2 things. we did a financing in the beginning of last year, so in July of last year, to do an acquisition and to strengthen our balance sheet. So part of that cash increase was from the fundraising. Part of it was ongoing cash that's generated from the business during the year. And again, Adam will touch these details in a lot more detail. Operationally, we acquired a company called Enhance out of Ireland, and it was focused on the mobile space. And now we fully integrated Enhance, and have been very happy with that integration. And now they're now fully integrated in BLANCCO, and we're selling their product. Partnerships are really important to us, and so we mentioned a couple of partnerships here. One is with an advanced technology partnership with Amazon Web Services. We furthered that partnership in July and now launched AWS Marketplace, and so we're a very close partner with Amazon Web Services. We also launched some strategic partnerships with Deloitte India, which is focused in the enterprise space, and Aon, a big insurance company that's focused on the mobile space. We are, as I mentioned, a software company, so innovation is very important to us. And so we continue to innovate with 9 new patents. And then finally, earlier this year, we got awarded for the London Stock Exchange our Green Economy Mark. And again, Adam will talk a little bit more about why that's important both for investors and for customers. As everybody knows, COVID hit in the spring of this year, and we wanted to give investors some view of how that affected us. So in the short term, as you saw, the numbers were slightly affected. The enterprise, I think, market of the 3 markets probably most affected. Sales cycle lengthened a little bit. The channel business, which a lot of our enterprise business comes through, were a little distracted. But we did begin to see as soon as June, a comeback in the enterprise marketplace. In Q1, we're beginning to see, again, normal sales cycles and normalization of the business. So even though it impacted us in April and May, as soon as June and then this quarter have really seen a beginning to come back to this from both a pipeline perspective and sales perspective. The ITAD market actually was probably least impacted of our 3 markets. There was lots of kit that customers needed to buy, and so it led them to really see the biggest ones, a very little decrease in the market. In the mobile market, really, we're talking about secondhand phones that we care about, and I have a slide later that'll explain that a little better. But obviously, less phones have been flowing through the mobile ecosystem as retail closed around the world, and less phones moving through that ecosystem affect us in the short term. But again, in the long term, we don't see much effect. If we go to the medium and long term, really all the key demand drivers for our erasure service and enterprise will come back, and I'll talk about those in a little bit. Whether it's work from home, whether it's the data lifecycle management, whether it's the ESG movement, we really see that medium and long-term enterprise is a very effective market and a growth market for us, and Adam will talk about the growth we can expect from that. The mobile market will continue to rebound as well, too, with the introduction of 5G, iPhone 12, IoT devices. Again, we think even as soon as the second half this year, you're going to see a real rebound in the mobile space. And again, ITAD will continue to be a healthy market for us, kind of medium growth, a little bit slower growing than mobile and enterprise, but still a very important market for us. The other thing we did immediately when COVID hit was we looked at how COVID was affecting our customer base. We have over 2,000 customers, and I think we're very fortunate to find that the hardest hit sectors, things like retail or travel, make up a very small percentage of our business. So our customers were really not affected dramatically by COVID, which shows in the numbers and showed in our repeat business as we went out and talked to them about, upping their contracts or working with us long term. I'm going to move now to market drivers and talk through some market drivers that are important to us as we think about data erasure. So the first one you see is a hype cycle that Gartner puts out. So they look at, 30 or 40 odd technologies and put them in what they call a hype cycle, which is really a way to look at how customers buy our technology and where it is in the buying cycle. And you can see highlighted kind of in the upswing of the cycle, what they call data sanitization, which is same as data erasure. And they've put us in the category they call the slope of enlightenment, which really means that we're really just becoming a mainstream product that enterprises buy. So we're in the early stages of adoption, which is a perfect place to be because it's really the growth market that you want to be in. They believe that really robust data sanitization is kind of a core C-level requirement. And over the next 2 to 5 years, there'll be great adoption in the enterprise market for data sanitization. Another study that I think is important, it really has to do with, that came from Ernst & Young, was they interviewed 300 plus clients and talked to them about data disposition, which is their term for data erasure. And you see this interesting gap where it's becoming more and more important that how they manage their data and how they dispose of their data long term, and a gap between how they're handling today. So you see 62% of the people think it's very important from a regulatory perspective, and that you really need to manage your data, but only in the 40% know how to do that. So there's an interesting gap that's there that we think we can take great advantage of as data disposition becomes more and more important in the enterprise. The last thing that's really important to us is all the regulatory environment that's happening around data privacy and the right to be forgotten. So you may be familiar with GDPR. It's gotten a lot of press in Europe. There's really over 100 plus different data privacy rules around the world that are very similar to GDPR. And that's an important driver for us as people needed to manage their data. Part of what they need to do is you have this right to be forgotten or erasing your data. And we work with companies to help make sure they can meet the regulations that not only happen throughout Europe, but really around the world. And the last market I want to talk about is the mobile market. I mentioned earlier where we play in the mobile market is really the secondary device market. When somebody turns in their phone, that phone needs to be erased, needs to be diagnosed, and it needs to be refurbished and resold. And what you see, it's a real growth market. So in 2018, about 175 million phones came back into the secondary market. That number is going to grow to well over 330 million phones by 2023. And so it's really a growth market for us. All those phones need to be touched by our partners, and we can help them diagnose the phone to see what condition's in, erase that phone to make sure all the personal data is taken care of so it later can be refurbished and resold. And so it's a very important market for us and a real growth market for us as we think about the mobile market going forward over the next 3 or 4 years. So Adam, I'm going to turn it over to you now and talk a little bit about sustainability.
Afternoon, everybody. So yes, as Matt mentioned, the competition that we tend to see in our markets is a little limited, and actually our main competitor is the physical destruction of assets, which is still typically what we tend to see the majority of companies doing out in the marketplace. We still feel as though data, that the adoption of data erasure is still quite early, as Matt showed in the Gartner hype cycle earlier. We think part of the reason for that is just the common misconceptions around physical destruction. So I think to the layman, it feels as though it's more secure to arrange for equipment to be shredded in big industrial shredders than to have data erasure run on them. But the reality is that often proves not to be the case. We've seen instances where once that the assets leave your environment and are taken away by a third party to be destroyed, it has been seen on regular occasions that some of those devices end up being resold on the market without being fully sanitized, and you can't track that once it's left your premises. So using data erasure, you'll get a certificate showing that the full erasure has taken place, the date it happened, the serial number of the device that was fully erased, and so you have a full audited track record of how your equipment was managed. It also is a misconception that physical destruction is cheaper than data erasure. What we see in many cases is that some companies are able to get a small revenue stream coming from using data erasure, where they're able to resell the assets that have been sanitized. So again, that doesn't quite hold true. And I think another important distinction for us is how solid state drives are used. Solid state drives are becoming more and more common, and in order to destroy those, they need to be shredded to a very, very small size, which many physical destruction companies can't do. So again, it's another highlight in terms of how the physical destruction isn't always as secure as data erasure. And these checkboxes here sort of list out some of those key benefits of using data erasure and how that compares to physical destruction. So I think for us, the challenge is raising awareness. We're quite a small company, and for us to get general awareness out there that there is an alternative to data destruction, to physical destruction of assets, is a key challenge for us. And that's where these channel partnerships we're developing become really important, where people with a much louder voice than us can help us to tell the story. So we'll see more of those relationships being announced over the course of the next few months. So we've been looking increasingly at the ESG impacts of the company. Last year, as Matt mentioned, we got the Green Economy Mark from the London Stock Exchange, and this is in recognition of companies that generate more than half their revenue from environmentally friendly activities, which we are considered to be. It's quite unusual for a software company to have an ESG angle to it, but this is something we've seen a lot of interest in the investment community. More and more institutions have ethical funds within them, and we're getting a lot of interest from those institutions who are looking to invest their funds in a much more environmentally friendly way. And that's causing us to look internally. We'll have a much more detailed sustainability report within our annual report that will be out in the next few weeks. We are also planning on putting out a standalone environmental report produced to SASB standards. That's the Sustainable Accounting Standards Board. And we are collecting a lot of data within your organization. So we're still in the process of putting a lot of that together so that we can show trends. But what we were able to see this year was that almost 76 million kilos of electronic equipment were sanitized using BLANCCO's data erasure software. So a large amount of equipment, but pales into the 50 million metric tons of e-waste that are generated every year. So still a long, long way to go. So now I'll pass you back to Matt, and Matt can go through some use cases that some customers have for our technology.
Thanks, Adam. Yeah, what I thought it'd be important for you to see is really look through the progress we're making in our business through our customers' eyes. How do they use our technology? And so you can understand better, the importance it plays in our ecosystem. So the first couple are really enterprise slides. So we had a large consulting and advisory firm that really needed the capability to raise data off a variety of devices and do it immediately, and then get that all back in a single source from a both compliance and security perspective. Need to understand what got erased when and having an audited source. And so what we did is we bundled a complete set of our enterprise products together: drive erasure, file erasure, LUN erasure, virtual machines. It was on live data, it was end of life data. And then through a single, our management console gave them a report that said, here's what got erased when. So it really allowed them, to meet the needs of a broad erasure need. And so we just recently signed a 3-year contract with the Asia division of this advisory forum. And we also see that, there's marketing programs we're putting together because we think about our 1,000+ enterprise customers. Many of them only use 1 or 2 of our products. And we think there's a real need to expand that need across and have a consistent erasure product for all their needs. And so you'll see us more and more go back to our customer base and mine that base for additional revenue as we think about expanding, our revenue in the enterprise space. The second one we need to make sure is, we realize that enterprise budgets are getting squeezed during COVID, even though the risk of compliance and security are increasing. So what we want to do is continue to expand our distribution network that allows us to get access to a broader budget within their customer. So I mentioned these two we signed recently, AWS and Deloitte. With AWS, our relationship we currently have with them allows us to tap into the AWS budget. So for example, if you're a customer and you committed to spend $5 million with AWS over the next year, and you want to spend $100,000 with BLANCCO, you can take that $100,000 spend and apply it against your annual budget. So suddenly we can tap into the AWS budget as part of our selling proposition. And a Deloitte, big consultancy firm, they're obviously out talking to customers about their security risk and compliance risk, and they're going to act as a channel for us, starting in India. But I think we're talking to them both in other places in Asia, and really a worldwide agreement where they can continue to sell our product as they consult on both compliance and security issues that customers have. A third one in the enterprise space, which is really unique, it's a very small customer, but it talks about how we want to be creative in the marketplaces. was a healthcare company that had a lot of end-of-life assets, but they also had a strong corporate push to be carbon neutral. So we worked with one of our distributors, Bayside. They worked with a carbon net neutral company and packaged together taking this equipment end of life and creating carbon credits with them. So we really were able to hit two important things for this customer. We took care of their end of life assets, but we also created carbon credits that basically allowed them to be carbon neutral. So it's an interesting example of how we can work this ESG angle that's very important to customers and help them not only with their erasure, but also other corporate initiatives they have. If we move to the mobile space, really what's important to carriers and mobile logistics company is efficiency. And because they process millions of phones, that those 200 or 300 million phones a year that come back, it's really important they can process those phones very quickly. And we did two things. We combined our mobile erasure product with a product which we call intelligent business routing. It's really a workflow product that can identify high value assets as they come into a third-party logistics company. If it's an iPhone 10, they'll immediately route that because it's an important product quickly through their line. And if it's iPhone 7 that really doesn't have as much value, they'll take their time. So combining these two different products really allows us to have the most efficient software product in the marketplace. And what we found is a lot of interesting attraction on this. We signed a multi-year contract with a Nordics refurbisher. We signed a contract with Australia's largest mobile carrier, and et cetera. Other examples, all these have been signed over the last 3 months during COVID. So you can see that COVID's not slowing down what we do as we think about this important market for us. The next slide is, again, this really ties directly to our acquisition of Enhance. So we were never able to call into the insurance companies successfully as they provide insurance to mobile markets, because the issue they have is when they provide insurance to an end user, they can't really tell the condition of their phone. So somebody will drop their phone, crack their screen, then get insurance. And so there's a lot of fraud and problems that insurance companies have. And so with our Enhance acquisition, we have a mobile-based diagnostics app that we can integrate directly into the onboarding solution that Aon use. So when you sign up for an Aon insurance product, you will download the Enhance Now BLANCCO app, and it will do diagnostics on your phone, including even look at your screen to see if there's cracks. So they know exactly what condition your mobile phone's in before they insure that. And so we've integrated that with Aon. It's a great product for us in terms of opening a new market in mobile insurance. And I think you'll see us announce other insurers over the next few months and years as we attack this market through the acquisition of Enhance and the capabilities it brought to us. The last example I'll give you is in the ITAD space. And again, ITAD's very similar to the mobile space. They're all about driving efficiency. So we were able to take the same product we use in the mobile space, intelligent business routing, apply it to our ITAD space, and show them that we have the best product and the most efficient product to drive devices through your factories. And so again, during COVID over the last 3 or 4 months, we re-signed the 3 biggest ITAD customers globally: Ingram Micro in North America, 3-Step IT in EMEA, and TESM in APAC. And so this is already a market that we have a very high market share in. But I think we continue to really find that we have the best solution for them and find customers re-signing contracts with us to make sure that we can provide them service for now and to come. So Adam, I'll pass it back to you and let you go through the financial highlights.
Thank you, Matt. So in terms of the headline numbers, Matt touched on many of these earlier. We grew revenue 9% this year. Operating profit and EBITDA were both up quite nicely, but I guess there was a little bit underneath the numbers that's worth spending some time on. So revenue, part of the revenue increase this year came from the acquisition we did in July of last year, and Enhance came with 1.2 million of revenue. So taking that out of the numbers and adjusting for constant currency, we grew by 3%. But on the flip side of that, we did talk at the half year about our biggest customer with a mobile retailer in the US who'd represented 8% of our revenues last year, had recontracted with us on a much lower basis. and that meant that in the second half of the year we were going to have a revenue gap to fill, and that revenue gap was around 1.3 million pounds in the second half of the year. But despite that, we still managed to match last year's H2 revenues, despite the COVID background and despite losing a lot of that customer. So we saw really strong growth in the first half of the year, 19% at headline level, and then growth was pretty flat in the second half of the year as a result of having to backfill that revenue and also the slowdown that we saw because of COVID. But we did see underlying in the numbers a real pickup in business towards the end of the year. June was very strong, and as we've gone through the first quarter of this year, we can see business not quite back up at the levels that it was pre-COVID, but certainly very well on its way there. So I think there's a lot to be encouraged about. We feel as though what we will see through the coming year is we've got another gap to fill on that customer that recontracted with us, which is 1.3 million again. That comes through the first half of the year. So I think in the first half of the year will be relatively flat year on year. And then we'll see a very strong period of growth we expect in the second half of the year, where the comparison period is quite a low one. We would ordinarily expect to do better than we did in H2 in normal circumstances. But I think all in all, given the disruption in the market and the difficulty, the business held up remarkably well and showed itself to be resilient in a somewhat challenging environment. When we look at the gearing in the business as well, we're expecting to really see the operating margins grow from here on out. It grew moderately during the year, but we always budget internally that our cost base is going to grow at a much slower rate than our top level revenue. So I would expect us to see operating margins grow relatively well over the next 2 or 3 years and getting us somewhere up towards that 20% operating margin level. That's certainly the target that we're aiming towards. On the balance sheet, the headline number is cash. So at the end of the last financial year, we had 100,000 of net cash, but we did have a debt line with HSBC of £6.5 million. And then we did a fundraise in July, which raised 10 million in total, of which 4 million was used for the acquisition that we did, and 6 million went to the balance sheet. And the increment ahead of that is cash we've managed to generate from trading. So we're now in a position with no debt at all on the books and 6.7 million of net cash. So a real strengthening of the balance sheet over the period. Other than that, it's a fairly straightforward balance sheet. Our debtor balance has gone down a little bit despite our revenues going up. So our debtor days are improving. We have very little exposure to the customers in difficult sectors like retail and hospitality and travel. So we're not really seeing any issues with debt collection from our customers. And our payable balance has come down because last year at the end of June, we were in the midst of completing an acquisition. So there were some costs in the books which aren't there this year. But I think actually now it's a pretty straightforward balance sheet that we're looking at. On the cash flow side, we did point out last year when we reported the cash conversion that's stated here, 131%, that wasn't a sustainable level of cash conversion. We benefited last year from the closure of a deal with a major software company who paid for 3 years worth of licenses up front. So that meant we were able to get $1.2 million in before the year end, but the revenue is being spread over 3 years. So it just saw an exceptional cash conversion number. The number this year of 90% is much more in line with what we'd expect to see going forward. And I think anything in that sort of region would be much more normal as we push ahead. The last slide on the finance section is really just breaking down the revenues in our business between the 3 markets that we operate in and also the 3 geographies. And you'll see we've got a pretty even split in the segments that we operate in between the 3, but there's somewhat different stories, I think, in each one. So in enterprise, we grew extremely strongly in the pre-COVID period. So our first half of the year, we grew enterprise by 28% in the first half of the year. So really strong growth. As Matt said earlier, enterprise was probably the area that was hardest hit through COVID, where it was quite difficult to get things over the line and win new business. But we're well supported through the repeat business that we have, where about 75% of our revenue comes from existing customers. So we still managed to report growth of 12%. We expect enterprise to grow faster than that in the coming years. We think this should be comfortably a 15 to 20% a year organic growth play. And if we can really get some of the channels moving, then it could grow faster than that. But yeah, we think that's where the immediate fast growth is going to come from. ITAD continues to be a strong part of business for us. We think the growth rates here will probably be the slowest, somewhere between 5 and 10%. But because we have such a large market share here, it's difficult for us to get more market share and grow that a lot faster. It will benefit from the regulatory and the sustainability drivers that we see in the enterprise part of the business, but we don't think the growth opportunity is quite as high there as it is in the others. But if we were to look at the business as profit centers, ITAD would be the most profitable because we spend very little money on marketing, very little money on R&D in ITAD, and so the cost base of ITAD is quite low, and so it's very much a cash generative part of the business, which really supports the innovation in the other areas. And then in mobile, so on the face of it, it grew by 8% in the year. We did benefit from the 1.2 million from the Irish acquisition, but we also had the flip side of the 1.3 million coming out in the comparison period in relation to the mobile contracts in the US that we had. So I think that underlying growth rate of around 8% is pretty is reflective of the progress that we're making. In the second half of the year, if we exclude the impacts of Enhance and exclude the impacts of that major US contract, actually mobile grew by 20% in very difficult environments. So I think we are encouraged by mobile. We do think that this can grow by 15 to 20% a year. We are seeing the market itself grow by about 14% a year in terms of how many handsets are being resold in the second-hand market, and we think we can get some good revenue, market share from our competitors in that market as well. In terms of the geographies, America looks like it shrunk, but it's really a reflection of the of the contract with the mobile retailer. And once you strip that back out, we saw reasonable growth in America. But where we're seeing real growth, both last year and as we come into this new financial year, is in Asia, which grew by 28% last year. So they have worked through the depths of the COVID pandemic and really come out the other end much quicker than we've seen in the rest of the world. And you know, we continue to see Asia being a very strong growth area for us. So that's it on the finance slides. I will pass you back to Matt to sum up before we go to questions.
All right, thank you, Adam. Let me just go to my last slide. Yeah, so let me just do a quick summary and then we'll take questions because I see there's lots of great questions coming in. So as Adam just did very eloquently, you know, we grew revenue profit in an uncertain market. We continue to innovate. Patents are important to us. We are a software company. We had 9 new patents this year. As we mentioned, we successfully integrated Enhance into BLANCCO and see that as a new revenue growth driver for us. Strengthened our balance sheet both through our internal business and a funding. We were lucky at that we're very much a virtual company before COVID. You know, half of my management team is in the US, half of it is in Europe. We have development centers around the world. And so we're used to working remotely. So I think we've really integrated very seamlessly from work from home environment. And now have opened up several of our offices back up, especially the Asian offices, which is, as Adam mentioned, have been least affected by COVID. We continue to expand our relationship with key players, people like AWS, and I think you'll see us mention just a handful of other major software players that we want to do integrations with over the next 12 or 18 months, because I'm a big believer in the software ecosystem and being parts of other people's budgets. You know, we'll continue to see, as Adam mentioned, a modest disruption in the first half of the year, but I think as we look at medium and long term, even the second half of our fiscal year, which starts in January of 21 and beyond, the sustainability drivers are really great for us, and we see us getting back to the growth rates we were pre-COVID. So I think we're really pleased that we were able to get through this uncertain environment in a pretty unscathed way. So I'm going to stop the formal comments there. I think there was a couple questions that came in early. We can hear those, and then we'll go through the other questions that have been asked during our presentation.
That's fantastic. Thank you very much, Matt. Thank you, Adam. Ladies and gentlemen, do please continue to submit your questions using the tab situated in the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. Lastly, before I hand back to Matt and Adam, I'd like to remind you your feedback is important to the company. Immediately after the presentation has ended, you will be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Matt, Adam, before we look at the questions submitted during today's presentation, I wanted to ask you a couple of questions we've had pre-submitted from investors. So perhaps, Matt, if I could aim these two at you, if that's okay.
Absolutely.
Fantastic. The first one we've had, you mentioned in your update, the sales cycle lengthened. What are you currently seeing there?
Yeah, really what we've seen during COVID is when COVID first hit, we call on, the CIO, the IT organizations, and a lot of focus was on just getting people up and working from home. And so they had a lot of distractions, I think, during COVID. So we saw, sales cycles lengthen a bit, mostly in the enterprise space, because I think our buyer was distracted. I think we've seen that, come back almost to normal now, and that, people are used to working from home. They understand there's probably going to be a long-term shift of partly being in the office, partly from home. And so if you look at our pipeline, for example, our pipeline's above what it was at this time last year by about 10%. And we've begun to see the sales cycle come back to normal. And so I think it was really a short-term disruption where people were distracted, rightfully so, including our channels that we sell through. But a lot of that has come back to normal. I think by the end of this year, we'll see the sales cycles kind of where they were always pre-COVID.
That's great. Thank you very much, Matt. The second question we had pre-submitted, you did, I think you guys have pretty much covered a lot of this in the presentation, but I'll ask it anyway. How are you growing your sales pipeline, and how do you work with channel partners to deliver growth? I know you have covered quite a bit on the partners, but if there's anything else to add, that would be great.
Yeah, I would just say, I think we covered most of that, but in the enterprise specifically, we're about 50 direct, 50% channel. We see channel over time, growing to a much bigger percentage than direct. And I think it'll be through our traditional channels that we work with, and these new strategic channels like AWS and others that we think we can be part of something bigger. So I think you'll continue to see us move more to indirect model in the enterprise. Some other spaces we stay direct because there's just a handful, for example, of ITADs, so that tends to be a much more direct market, and we'll stay that way.
That's great. Thank you very much. Guys, I know I haven't given you perhaps a great amount of time to look at the questions that have come through today. I know the company will review all questions submitted and publish responses where it's appropriate to do so. But if I could just perhaps ask you to have a little scan down the questions and see which ones you could possibly answer for us. If you could just read them out, that would be fantastic.
Yeah, well, Adam, I think I'll take the first couple, and then maybe the next couple are for you as well, too. So first question we have, I'll read the question verbatim and then try to answer it. Congratulations on the Amazon tie-up. Do you see this generating revenue growth in the near term, or will it be a slow burn? And so we really see that, Amazon, there's layers of partners partnership levels you need to get through. It started with us from a technical perspective as, advanced technology partnership. We expanded that now to be a part of the marketplace, AWS marketplace. And there's even a third one that we think we can get to this year. And each one gives us greater visibility and access to Amazon as a channel. So I'd say, we have not generated any revenue because we just got to the marketplace in June. So in last year, no revenue from Amazon, but we do believe it will grow. And most of that's upside to our plan. So all these big strategic partnerships, they're hard to manage, right? But we think we have the right partnerships. And I think will give us great upside in our plan. And we expect they'll be, really good channels over the long term. But they start slowly and grow as we get more and more involved and as our partnerships get deeper with them. Second one was great update. Who are your main competitors, and what are the greatest barriers to entries entering the market, and how do you protect your position? So that's a great question. So it depends what market we're talking about. In the enterprise and ITAD space, our biggest competitors are not another software company, but they're actually physical destruction. So that to me is an awareness that will come around our way as we go. We have some very small competitors, but don't have the breadth that we have. And so I don't worry about competitors too much. In the mobile space, it's quite different. There's 7 or 8 competitors, all are a little smaller than us, and all compete in different parts of the market. And what we're seeing, interestingly enough, over the last few months is some of those competitors are struggling financially. They don't have the financial structure we have. None of them are public companies. They're all single threaded into the mobile space. And so COVID's affected them. In fact, we had one of our major competitors in the United States, a company called Pravasio, just filed Chapter 7, which is liquidation. And we've picked up a couple of their customers. And so we continue to think that'll be the most competitive space, but one that we can compete on very effectively. In fact, I think in all the markets, one of the things we see is our breadth of product, our breadth of patent portfolio, our breadth of distribution that allow us to handle customers in a different way than our competitors can. So, I think we feel very comfortable in our competitive position in all our markets, and certainly in the mobile market, we think there's opportunities for pick up market share because some of our competitors are struggling. Adam, I'll let you take the next couple.
Yeah, okay, no problem, Matt. So the next question is about how do the economics work on the Aon Diagnostics app, and can we give an example of the ROI for Aon? So yeah, this is a little bit different for us in terms of the way that this one works. So what you need to remember is that Aon are an insurance broker, and so they are providing a mobile platform to mobile carriers and mobile retailers so that their customers can take out mobile phone insurance. And then behind all of that, you have an insurer. So you've really got the three parties involved in this. You've got the retailer who's selling the insurance to their customers. You've got Aon as the broker who are providing the platform, which includes white labeling BLANCCO's capability to run diagnostics. And then you have the insurance company. So the way the economics work is that for every premium that somebody takes out, that premium gets split three ways between the retailer, the broker, and the insurer. And then we have a revenue share with Aon, the broker. So, really once Aon have created the platform, they can roll that out to multiple customers, multiple retailers, and take a slice of every premium that gets taken off of that. So it's a very nice ROI for Aon. It costs them no extra money every time a new premium comes through the platform, and so it's really 100% to margin activity to them. The next question we've got is, what scope do we have to flex admin expenses to drive profitability further? So we have a relatively fixed cost base. Largely our cost base is people. I would say about 75% of our cost base is people, and we can't flex it very easily. We were fortunate enough that through this difficult period, whilst sales slowed down a little bit, we didn't need to furlough anybody. We haven't had to lay anybody off, and so we've been able to keep the same headcount in place. But what we do have is a lot of operational gearing. That means if the top line grows a lot, we shouldn't see a big increase in the cost base. So I'm expecting actually from this point onwards, now we'll start seeing the operating margins widen, and we'll see more and more of the top line growth coming through to the bottom line. So no, we don't have the ability to flex admin expenses downwards too much, but we can keep a lid on them so that they stay relatively flat whilst our top line continues to grow. The next question I think is probably back for you, Matt. I'll ask it. So it's, how has COVID-19 affected our sales cycles, and what effect has people working from home had on the potential for the business?
Cycles, but there are a couple interesting things that I think from a work from home that actually are opportunities for us. I think from a new use case perspective, what enterprises are finding as people take laptops from home, as they work from home, there's new security and compliance risks that they never had before. Suddenly you're taking data that was behind a corporate firewall, and now you're working from your home that probably doesn't have the same kind of security. And so enterprises are working with us how that we can go down and remove at a file level information that they think needs to be protected more closely. So we think that's a new use case for us. The other thing that's come up is there's just simply more equipment in the marketplace. A lot of companies had to buy new PCs, new laptops as people work from home. Over time, I think a lot of those laptops and PCs and desktops that were back in the office will need to be brought to their end of life. And so all that kit will flow through the system, either through our enterprise customers or ITAD customers, which gives us, I think, a short-term impact that's improving it for us as well too. So I think both those things are kind of new things that are actually positive for us as we think about the COVID impact long term.
Next question is has come in and said, why are there £1.4 million worth of share-based payments, and while there is no dividend for shareholders? So the share-based payment line is an accounting entry. So this is in relation to share options that have been issued to employees and senior management. So 3 years ago, just before Matt and I joined, the new share plan was put in place. It was incentivizing key managers to grow the revenue in the business, to grow the profit in the business, and to grow the value of it. And I think over that period, we've seen the share price quadruple, and that's meant that targets have been hit by our employees, and the share-based payments are the share options that have come through to them. So those have been funded from an EBT, which was shares that were bought back by the company about 4 or 5 years ago. So there's been no dilution to the current shareholders. There's no cash outflow, and it's recognition for really key staff for helping us to grow the business. With regard to a dividend, it was only a year ago that we had £100,000 of cash, and we were asking shareholders to raise money to help us complete an acquisition. So most shareholders wouldn't welcome the opportunity for us to take money from them and then pay it back to them in the form of a dividend. So that's why we don't have a dividend at the moment, and we think it's unlikely there will be a dividend for the next couple of years, because we think the money that we're generating, the cash that we're generating, needs to be reinvested back into the business. The next question is that BLANCCO has £150 million market cap, £30 million turnover, and is barely profitable. So there's low growth except in China and the Far East, and it doesn't add up. He would expect huge growth to justify this high market cap, and can we tell them more about the outlook? So yeah, I think it's probably reasonable to say that the profits aren't huge, and the growth was marked in Asia and not so much in the other areas. But really, the growth potential in this is really why the valuations are where they are. I don't think they're out of line with other tech stocks that we see on the market. You know, we're in the line with our peer group, but I think we have a very significant opportunity. I think it's extremely unlikely that there'll be mass physical destruction of electronic equipment in 5 years' time, and an alternative has to be found which still secures people's data, and that's the solution that we have. So I think as awareness grows, as we continue to develop the channel partnerships that we have, there's a fantastic growth opportunity. Just organically, we can grow 2 out of the 3 segments 15 to 20% a year. And if we can really push on some of the channel relationships, I think we can grow it faster than that. But we'll continue to work on that. The next question is, what is customer concentration like? Is there a danger another large customer could alter terms and impact revenues? Well, actually, that customer was really the only one that was very significant. So that one customer in FY19 was 8% of the total. The next biggest customer is 3%. So our top 10 customers represent just under 20% of the overall revenue base. So that was the only customer we had real exposure to. And it was somewhat unique as well, in that it was the only customer we had which was offering a solution in their retail stores. All of our other mobile customers are mobile processors who are processing large volumes of mobile phones in warehouses using our software. So we think it's unlikely a similar situation. You can always lose big customers, but we certainly feel that the risk is quite low there.
Yeah, I think the last one's probably mine, Adam. So it said, it'd be more reassuring if the CEO didn't sell a large quantity of shares today. So let me address that. So, I've twice in the last year personally bought shares, and Adam has as well too. And of course, I got awarded part of those shares of joining 2.5 years ago to hit our targets. So the only shares I sold were really to cover my taxes. All the other shares I continue to own and very bullish on the stock. So I think you got to think about it in a different way. I picked up another 150,000 shares that I'm now an owner of. And so my ownership in BLANCCO just went up substantially today, and only sold shares that cover the taxes that are associated with those.
And the last question, Matt, might again be one for you, is are OEMs, or are they going to become our competitors?
I don't really think so. I mean, it's a good question because, people build this directly into their equipment? And I think it'd be interesting to know that most of the big storage OEM players are actually customers of ours internally. People like, HP, people like Dell are all customers internally. And so they don't really have the capabilities to build in something. If they did, I think we'd talk with them about building us into them. And so if you look at it, and not an OEM, it's really a white label, but we certainly have the capabilities if the OEMs wanted to put an erasure product directly in their product, whether it's hardware or software. We have the capabilities to do that. And again, maybe the OEMs are already customers of ours internally. I think that was customer for the last question.
I think you've pretty much gone through all the questions that you can. I'm quite conscious of time as well. But thank you for addressing those questions that you could. And of course, the company will review all questions submitted today. So any more come through, we'll of course have a look at those as well. Adam, perhaps I could just ask you just for a few words to wrap up before I redirect investors for feedback, please.
Yeah, sure. I think, as we said in the answers to the questions, we feel incredibly positive about the prospects for the business. The last 6 months have been challenging for everybody, and BLANCCO have come through incredibly well. We've held up the revenues and matched what we did last year. We still managed to increase revenue and profit over the course of the year, and I think we feel incredibly positive about the prospects as we go forward and the opportunity to create more value for shareholders. So thank you all for attending the call today, and we look forward to similar events in the future.
That's great. And sorry, Matt, if you've got anything just to add as well, just before we redirect investors, that'd be great.
No, I'd echo Adam's comments. And, this is the first time we've reached out directly to kind of retail investors, and anxious to continue this kind of discussion, and look forward to the feedback we get from this presentation today.
That's great. Thank you, Matt. Thank you, Adam, for updating investors today. Just on that note, could I ask investors not to close the session, as you will automatically be redirected for the opportunity to provide your feedback. If you've accessed this meeting from our website, the feedback page will appear in front of you a few seconds after the end of the webinar. If you've accessed it via the link sent you in the email, you'll be asked to log in to submit your feedback. It takes just a few seconds. If you would please do it, be greatly received by the company. So on behalf of BLANCCO Technology Group PLC, Matt, Adam, thank you very much again for presenting to investors, and thank you for everyone for attending today.